Okay, last class, we were looking at forecasting financial statements. And this is just a continuation of last class. I think we had done this one. We did this one, but on this computer that I'm using, actually it has not been done, isn't it? Also, this one we did, and the first one. So I want to do the third one. And I've also added this one here. This one was from the last sitting, but only I've just taken out some parts, isn't it? Additional information number 1 and 2. I've just left the part of forecasting, isn't it? When we reach financial management, we will answer the whole question, isn't it? I'm just showing you the part of forecasting. Also, this one, we had not tackled it. So the question, I'll just start over the question. So as the finance manager of Gracers Limited, you've been tasked with creating a 3-year pro forma statement during the company's budgeting process. Below are the current year financial statements, isn't it? You've been given the statement of financial position. Then additional information, the sales growth rate is estimated to be, so it is 3 years, isn't it? To be at a constant of 12% throughout the forecast period. The gross profit margin is also expected to remain constant as the current ratio of 45 throughout the forecast. In the year 2022, the company reported sales of 21.89 million and earnings before tax were the 6.56 millions, isn't it? So we will just create our assumptions here. So we have our sales, isn't it? So we've been given the sales control bolt, we've been given the sales of 2022 tab. So 2023 is a forecast, isn't it? You can write 2023 F tab, 2024 forecast tab, 2025 also forecast tab, isn't it? To just show that these ones are forecasts, isn't it? Control bolt, isn't it? So remember here we're working in thousands and we've been told the sales were 21.89 million. So it will be 21,890, isn't it? Just you multiply by 1,000, isn't it? The difference to get to million, isn't it? Then we've been told the sales growth rate is expected at a constant of 12% throughout the year. So from the 2022, isn't it? Then we multiply by 1.12, isn't it? Sorry, 1.12, isn't it? The 12%, 100% times 2, isn't it? Then I just drag, isn't it? On the same additional information, the gross profit margin is also expected to remain a constant at the current ratio of 45 throughout the forecast, isn't it? So we'll skip cost of sales, control bolt, and write GP for gross profit, isn't it? So this one is 45% of sales, isn't it? 0.45. Then you multiply by the sales, isn't it? And it is remaining constant throughout the period, isn't it? So here our cost of sale. So cost of sale. Remember, we have not been tasked to prepare we have been just asked to prepare the statement of financial position, but these assumptions are the one we'll be using, isn't it? So equal, isn't it? It will be this one minus the sales, isn't it? The gross profit, isn't it? It will be in a negative format. It will be negative, isn't it? Because it's an expense. So I'll just write in here, also here, then also here, isn't it? So I can control bolt just to make sure that isn't it? Alt HBP. Then we'll continue, isn't it? So throughout the forecast, in the year 2022, the company reported, so the earnings before tax of 6.56 million, isn't it? So maybe you have expenses, then earnings before tax, isn't it? Control bolt. So equal so it was just a number, I can just write it directly, 560, isn't it? Times 1,000, isn't it? Then I will continue. So we'll go to the next one where they say the company total expenses to sales is estimated as a constant of the year 2022, isn't it? Gracers Limited has a dividend payout ratio. So it's estimated as the company total expense to sales, isn't it? So here, what you are skipping is the expenses, isn't it? So this one will be expenses. So here you must remember, you've been told expenses to sales will remain constant, isn't it? Then we've been told of the dividend payout ratio of 10%, isn't it? Additionally, the company has a tax rate of 30%, which will remain constant, isn't it? So we have taxation. Then you have now profit after tax. Then you have dividends paid, isn't it? So taxation, we've been told it will remain that it will be 30%, so multiply by 0.3, isn't it? So I'll put negative 0.3 so that it comes as an expense in negative format, isn't it? Then I'll drag. Then so this one will be the sum, isn't it? This one plus the taxation, control bolt, isn't it? Then the dividends paid will be 10%, isn't it? So I'll put it as an expense. 0.1 we multiply by this one, isn't it? 10% of that, isn't it? Now to retained earnings. So what goes to retained earnings? It will be equal this one plus the last one here, isn't it? Enter. So remember, we had not finished on this one. So we will find the expenses here, isn't it? The difference of the expense, isn't it, here? Because we've been given earnings before tax, control bolt, isn't it? So the difference here equals, so I'll take the earnings before tax, you minus the gross profit, isn't it? So because here we've not been told, we've not been told of the others, isn't it? We have been just told the company total expense to sales is estimated to remain constant, isn't it? So we'll find the expense to sales ratio, isn't it? So here, expense to sales ratio, isn't it? So equal, so it will be, so because our expenses are in negative, I'll start with a negative to make them positive. I divide by the sales, isn't it? You find that it is 15%, isn't it? So this one is expected to remain constant throughout the sales. So equal, I start with a negative, I take the 15%, I multiply by the sales, isn't it? Then I'll just, maybe because I never locked this one, isn't it? If I click in this cell, I lock this one fully, so it is J, this one, I press F4, then enter, isn't it? Then I just have to drag. So let me click in this cell. It says R26. So it's supposed to go to the cells. Oh, sorry, I started wrongly. So I'll correct here. Escape. So the 15% is what I make negative, isn't it? So I take this one, I press F4, I multiply by the cells, isn't it? Then I drag, isn't it? They will come in there. Then the gross profit margin, of course, the earnings before tax should be this one minus, plus, sorry, because this one is in negative, plus this one here, isn't it? Control enter. Then I just have to drag, isn't it? And taxation will be automatic. So also this one was just an addition there. isn't it? So this one was 10% of the above, and you can see it's just 10%. Then to our retained earnings, what we'll take to retained earnings, isn't it? I'll select the whole thing, and I do to 2 decimal places so that it looks a little bit neater, isn't it? Now we've finished the income statement, isn't it? But the income statement was not what was required, isn't it? So because here we were given but we had to create the income statement so that we can create this one, isn't it? Then so we'll go to the statement of financial position. So S of P, assumptions, isn't it? So we have an additional information number 3, isn't it? So trade receivable to sales, inventory to sales, trade payables to cost of sale will grow as the growth in sales, isn't it? So equal. So first we will look for they will just, they will grow as the growth in sales, isn't it? So they just grow by 12%, isn't it? So actually that one, there is no big deal. Then our property, plant and equipment is expected to grow by 5% annually, while investment will reduce by 2% in the first year of the forecast, then increase by 10% in the second year. During the forecast, there will be no issuance. So I think we can just go directly to create the forecast, isn't it? So we'll use the 2022 one. So Control C, Control V, isn't it? So this one is the control bolt 2022. Sorry, 2022 actual, isn't it? So 2023 forecast, 2024 forecast, 2025 forecast, isn't it? Control bolt, isn't it? Forecast, S of P, isn't it? A statement of financial position, isn't it? I'll just write I'll merge control bolt. So someone is saying kindly repeat on dividends. So dividends, we were told here, the Grazers Limited has a dividend payout or ratio of 10%, isn't it? So 10% of our profit after tax will go to dividends, isn't it? So this one is just 10%. You can see 10% times profit after tax, isn't it? So on this one is just simple. You can see it was not very complicated. You can see property, plant and equipment is expected to grow by 5%, isn't it? Equal, so the previous year you multiply by 1.05, isn't it? 5%, that is, isn't it? So equal, this one will reduce to 98, isn't it? You can see here they said while investment will reduce by 2%, isn't it? So 2% from 100 is 98, isn't it? 0.98, isn't it? Then increase to by 10%, isn't it? So 1.1. Then you multiply by the answer, isn't it? So because we are never told of 2025 in the third year, we assume it also increased by 10, isn't it? Here is just the total. I just even drag. Isn't it? Then another thing we talked was the trade receivables, inventory to sales, trade payables to cost of sale, isn't it? So here is what I was saying, inventory to sales, isn't it? So we'll first start with the receivables to sales, inventory to sales, isn't it? Then payables to sales, isn't it? Sorry for the, so our receivables, we just take our receivables here, divide by our sales. So our sales was 21,890, isn't it? So I just had typed in, you can see it is 22%. So equal our inventory. So our inventory for the 2022 was this one, divided by our sales, even our sales is here, isn't it? Then equal our payables, isn't it? Divided by our cost of sales. So I start with a negative, then I take that one, isn't it? 27% percentage, isn't it? Two decimal places, isn't it? So you can see now this one is the receivables to sales, the percentages, isn't it? Receivables to sales, isn't it? So we'll come to receivables because they'll grow as the growth in sale, isn't it? We'll multiply by the sales because the sales have already incorporated the growth, isn't it? The sales have already incorporated the growth. So is that one real? Equals. So this one here, I press F4, I multiply by the sales. And it's because I did F4, I just drag. So actually it reduced, but it never went with the growth in sales. But because here we already incorporated the growth of 12%, isn't it, the sales? Isn't it, we already incorporated the growth of 12% equal. So this one will be the inventories, isn't it? To press F4, you multiply by the sales that have already growth, isn't it? Then we just drag. Then maybe, was there an additional there? So we'll continue. Maybe. So, and then during the forecast, there will be no issuance of shares and bank overdraft is expected to be cleared in the next financial year, isn't it? So the shares will remain the same, equals this one, isn't it? Then you drag. For our retained earnings, we'll take the previous retained earning plus what was taken to retain earning in the year, isn't it? So this one was what was taken to the, that's why we are creating the income statement actually. Isn't it? So what plus what was taken to retained earnings, isn't it? So the retained earnings were growing. Then this one will go just that way, isn't it? Then our payables here equal, isn't it, the percentage? Then you multiply by. So these payables were to cost of sale, isn't it? So maybe I'll lock that one, F4. Then you multiply by our cost of sale, isn't it? Our small here, isn't it? So I'll put a negative, then you multiply by this one, isn't it? See, it never changed. Then you drag, isn't it? So the bank overdraft is expected to be cleared, isn't it? And I think there's some additional information missing. It was on the prepayments cash. Prepayments and accruals were expected to also to remain constant, isn't it? Because you cannot forecast how much we will have, isn't it? So these ones were to remain constant for the forecast. And also the accruals were to remain constant for the forecast, isn't it? So here is just finding the total. Isn't it? And also here. So I'll be dragging because the formula is already in, isn't it? That you see, but that's PPE. That's PPE I've used as receivables. PPE I've used as receivables. Where I used sorry. No, you can see even if I click in this cell, you can see the previous PPE times 1.05, isn't it? Here you've been told property, plant, and equipment is expected to grow at 5% annually, isn't it? I'm not getting that. Trade receivables to sales. Okay, I used PPE here. Where is the F16? I used trade receivables to sales. I don't know the error is coming. You see, you cannot project what cash and bank. No, bank will not be paid by the cash we have, isn't it? So, like, I'm seeing someone is trying to say there's an error somewhere, but I'm not seeing actually where it is in the F of P. This F of P, I've just taken it here and I've just imposed it here. So I don't know why they're saying there is too many errors because me, I'm not seeing actually. L44, yes, that one is good. Okay, I did a very bad error. Okay, I was wondering. So must be very careful. So times the sales, isn't it? The sales here. I took the wrong one. So these ones were to remain constant. So it is times the sales. So, oh, I took the sales of, sorry, I took the sales of, so this is, so you must take the sales of 2023, isn't it? Not the previous year. I'm sorry. Isn't it? So we also check on our receivables, isn't it? So equal the, our inventory, I mean. Sorry, I don't know what's happening. So I'll take this one, the receivables, isn't it? I do F4. Then I just multiply by the sales in 2023. This one, isn't it? Enter. Then I drag. So after it is this one here, I drag. Actually, I can see there is some increase, isn't it? So equal. So the inventory there, I press F4. I multiply by the sales in 2023, isn't it? That way, yeah. Payables also, yes, I'll go to there. Sorry for that. Then I was wondering because they said they were to increase us sales, isn't it? And you can see the percentage is maybe 12. Then also to payables, isn't it? So here payables equal, isn't it? The percentage there. I press F4. I multiply by the cost of sale. This one, isn't it? The next one in 2023. So I start with the negative, then I take that one, isn't it? So it was here. Then I drag. Something like that, isn't it? And so they said the last one was just the long-term debt will be used as the balancing figure for the pro forma income statement, isn't it? So the difference between the two will be the loan, isn't it? So I just take, so this one minus this one, isn't it? Enter. So because of the formula thing, it won't do. So maybe you can find the difference somewhere, or also you can use the goal seek function, isn't it? Sorry, so just let me just use the goal seek function. Let me take this down. Then I'll go to data. Let me pin. So make sure the analysis and the solver are on, isn't it? Then I'll just go to what if analysis, then our goal seek. Isn't it set cell? So I'll not be setting this cell. I want to set this cell down here, isn't it? To which value? To this value here, isn't it? So it is 34, isn't it? 179.6, isn't it? So by changing which cell, so maybe I'll move the goal seek by changing this cell, isn't it? Then we press OK. So maybe let me just remove the review part. Cancel. Okay, let me just remove the arrows, isn't it? So this one is called DCF, isn't it? Stroke additional funds needed. So it will be equal. So it is the total assets minus total capital and liability. What's happening? I don't know. Equal this one here minus this one. So it's giving me all. Let me remove the arrows. This one minus this one here. So actually it doesn't want to take the part, isn't it? I don't know why. It is not taking, that's the problem with the cell referencing in Excel, isn't it? So maybe the first one will take us an amount, 34, 179.6 minus this one, isn't it? Sorry, I forgot to do equal sign. I don't know what's happening. Because actually there's a difference, isn't it, between the 34 and 79 and this one. So maybe I'll just had typed in. I think it's just the cell referencing. So 30, 642.47. So I don't know why it's giving me a lot of things to do minus this one here. Equal, so this one here minus this one here, isn't it? So here what I want to bring to our essence is that maybe let me just type in the value 35, 36.86. Oh, this one was not a comma. I don't know today what's happening. So maybe I'll just drag and see. Yes, now that one is good, isn't it? You can see that our long-term debt was being repaid, isn't it? And for this year, 22. They are only we are only having a debt of this one, and we cannot now have a negative loan, isn't it? We cannot over repay our loan. So this one will go to cash, isn't it? Plus what was down here, because this one will go now to cash, because you cannot have, it can go to cash or to bank, isn't it? You cannot have a negative loan. So isn't it? So for this it will be zero. It means we didn't have a loan, isn't it? That's just why I was I don't know. I've written badly or what. So cash 6295.77. Okay, maybe I think we shall revisit, but actually you cannot have a negative loan. Even if they've said it would be used to finance, isn't it? You cannot have a negative loan, isn't it? You cannot overpay your loan. I think maybe we shall revisit. Maybe we take this one that was in the last sitting. So someone is telling me L52. Yep. I don't understand the L55 and N52. Actually, maybe I think we will revisit, but it's just a matter of forecasting. And you can see they're just the same things, isn't it? You can see revenue at 10% for the next 5 years. This one was more of valuation, isn't it? It was forecasting, but on the part of financial management, isn't it? So it was about a bid, isn't it? So we just look at the forecasting part only, because we are still under forecasting. Maybe I missed something, but if you can see where I missed, maybe I'll recheck. Let me see the chart. Actually, I'm not seeing where it is, but let's go to mainly forecasting, isn't it? It's not a must you get everything, isn't it? So, as I'm saying, is that I've removed the part of valuation, isn't it? So we are just doing the part of forecasting, because we are still under forecasting, isn't it? So the question, we removed additional information 1, 2, 3, and 4, isn't it? 4 and 5, isn't it? So we just look how forecasting is done. Actually, it's done by percentage. So this one can be maybe to relate to what we learned on the theoretical part. This one is expert given, isn't it? You have already been given the values, isn't it? So unlimited financial statement items are expected to grow as follows: revenue at 10% for the next 5 years, isn't it? So maybe you must have the previous year, isn't it? So I'll do Control C. Maybe I paste somewhere here. Control Alt V. I want to just paste the values, isn't it? So that it doesn't destroy my formatting here. Just a minute. The values are very small. So maybe I also take these ones, isn't it? Control C. Then I paste. So it was from here, isn't it? Control Alt V. Then, or maybe I can just paste all, because it is just the values that I wanted. So this one maybe can be in bold, isn't it? Also this one in bold. Then also earnings before tax in bold. I don't like the layout. Maybe I'll change to Cambria. Isn't it? So net income also, control bolt. Then retained earnings for the year, control bolt. Then carried down, control bolt. Control bolt. Control bolt. Control bolt, isn't it? So RHBU, because these ones are the total capital, and also this one, RHBU, isn't it? So it's just the same thing, we've just brought it here, isn't it? So this one is the 2022, isn't it? Actual. And this font is always small. So 2022 actual. Control bolt. So for the 5 years, isn't it? So actually we'll go to 2023, tab 2024, tab 2025, tab 2026, tab 2027, isn't it? Isn't it like that? So you've been told that the sales, let me just check this, isn't it? You've been told that the sales, the revenue, they will grow as follows, 10% for the next 5 years, isn't it? So it will be going by 10%, isn't it? Equals to this one, you multiply by 1.1, isn't it? The 10%. I can do Control A, isn't it? Then I just change the font once to Cambria. I increase to 14, isn't it? So that everything is just seen clearly as we go by, isn't it? It grows by 10%, isn't it? So I just drag, then I widen, isn't it? So forecasting is just as simple as that. Then maybe we go back. So earnings before tax, depreciation, and amortization over revenue margin is expected to remain the same, isn't it? So it is this one. So you must find the percentage first, isn't it? This one here, which is the same as gross profit, isn't it? It's expected to remain the same. So you find the current. That's why we brought in the 2022 actual, isn't it? So the gross profit divided by the sales, isn't it? So this percent will remain constant throughout the forecast, isn't it? So this one we multiply by the sales, isn't it? Similar to common sense financial statement. So it's just the opposite. Sorry, it was not here. So Control X, it was here, Control V, isn't it? And I just check if I took the correct. So 20% of 100 is 20, isn't it? It's so correct. Then maybe I just drag, isn't it? Control Bolt. So I forgot to lock this one, isn't it? So this one is, you must lock it also before you drag, isn't it? So then I'll repeat dragging, isn't it? And the difference here, it is the cost of sale, isn't it? You can see that also it grew by 10%. Then we go to additional information, isn't it? So depreciation stroke amortization to grow at the same rate as non-current asset, that is 15%, isn't it? So non-current assets, they will grow by 15% here, equal the non-current assets. You multiply by 1.15, isn't it? So they are growing by 15%, isn't it? That way just. Then also this one will also grow by 15%, isn't it? So this one will multiply by 1.15, enter. Then you drag. Isn't it? So it will be the summation, this one, plus the last one there, the depreciation, isn't it? Maybe you'll be back here, Control Bolt, Alt HBP, just put a border there. Then you drag, isn't it? You just go with the additional information, isn't it? As simple as that. You just, because they have already provided you the figures, isn't it? So interest expense at about 10% of the previous year loan debt, which will grow at 20%. So here they are telling you the loan debt will grow by 20%, isn't it? Equal, so this one, you multiply by 1.2, enter, isn't it? Then you drag, so, isn't it? And now interest is the last year's, isn't it? I can just repeat the additional information. Oh, sorry, let me do it at 100. So you are saying interest expense at about 10% of the previous year long debt, isn't it? So it is 10% of the previous year long debt. So we are here interest, so equal, isn't it? So it will be a negative because 0.1, isn't it? 10%, it's not growing. So 10% of the previous year. So if you are in 2023, the previous year will be 2022, isn't it? That's why we created the loans first, isn't it? Then you just have to drag that way, isn't it? Or rather, even you can just finish everything and you drag once, isn't it? So of course here it will be just the summation. So this one plus this one here, isn't it? Then tax rate, of course, is just 30%. So I'll put it in a negative 0.3 multiply by the EBIT, isn't it? So this EBIT, I want it to be bold, then Alt HBP for top border, isn't it? Then so we come here, it's just a summation. This one here plus this one here, isn't it? Enter. Of course, this one will be bold, Alt HBP for a top border. Then dividends will go to additional information. So we've done this one. So retention rate is 60%. Any balancing figure for the forecast financial statement is long-term debt, isn't it? Current asset and liabilities will grow at 10%. We are back here. So retention ratio is 60%. Dividend payout ratio will be 40%, isn't it? Negative 0.4. You multiply by the net income because it's the 40% of that. Then you can go for the year also. So it's just a summation plus this one here, isn't it? Then so this one will be in bold. Then this one here. So what is brought forward, isn't it? So brought forward will be the previous carried forward. Retained earnings brought forward will be the carried forward for the previous year. And now for this year, it will be, so the what was taken in this year plus brought forward, isn't it? Then you can select now the whole thing. Then I just drag. Isn't it? I think here we never did a dragging completely. Isn't it? It's just simple as that. Then Control Bolt. Isn't it? So you've been told the current assets will grow at 10%, isn't it? You multiply 1.1, isn't it? Maybe I'll drag later, isn't it? So here it will be the summation. So maybe I can just go direct because there are just two plus this one here, control enter, control bolt, alt HBU, isn't it? So remember, this one will remain constant, isn't it? While this one will be now carried forward, isn't it? So for the year will be this one that way. Then here it is just a summation. So alt equals control enter, control bolt, isn't it? Then maybe I can fill out the rest. Isn't it just that way? Then also, they said current liability will also grow at 10%, isn't it? You multiply 1.1, isn't it just that way? Then you drag, isn't it? So equal, this is just a summation. So this one plus this one here, isn't it? Then you drag. Then I will find the total. So equal. So it is the total equity plus total liabilities, isn't it? Control enter, control bolt, alt HP U, isn't it? Then you drag. So of course, we must have a difference because it's a forecast and a financial statement. They are not presented as a not balancing, even if it's a forecast. It must balance, isn't it? So they've said these funds, these additional funds, here it is. Where was it? Yeah. So any balancing figure in the forecast financial is long-term debt, any balancing. So you may have additional fund requires or excess funds, isn't it? Additional funds needed or we have excess funds. For our case, we have excess funds, isn't it? So this one will balance will be in the long-term debt. So of course, again, there's a problem of the what is it? So control Z of cell referencing, isn't it? So here you just minus directly 2300 cell referencing so that the balance will be, there will be no balance because it will be used, isn't it? As the long-term debt 0.20. And because long-term debt we had already calculated, isn't it? So you less the, so this one you just had typed it in because of cell referencing, it won't multiply, it won't less itself directly, isn't it? So minus the 14.59 minus now the, sorry, control Z. So the value that was in, and you can see that the values have been going while reducing, isn't it? Minus, because we linked our interest expense, because our interest expense now has changed, isn't it? So where is it? You can see our interest expense was not this way. That's why the cell referencing was bringing a problem because we had multiplied this value times 10. It was 10%, isn't it, to get the interest rate, isn't it? So, and that's how you prepare a forecast financial statement. It's a very simple concept, just from